Alrighty, folks, one of the things I am super excited about is we are bringing a new way to invest in real estate to the channel. It's called fractional investing. This is something that I think is only going to get bigger and larger as we go forward. This is something that the blockchain is really going to bring out and enforce. And we're talking with the team at RealBricks. How you doing, Nick?
Hey, Mike, I'm doing well. How are you?
I'm doing very well. So we've only talked one time before, kind of introducing what is RealBricks, why do you play, how does it work? Again, folks, go back and you can watch that video. I do have one question that I thought was very interesting from the last video, and that was from a viewer who said, how is this different than a REIT? So why don't we kind of hit that question up front, and then we'll actually get into the application.
Sure. Yeah. So the immediate answer is there's more control over what you're investing in, because on RealBricks, you're choosing the property, you know the address of what you're buying into. Whereas with a REIT, it can go towards just a big fund that's going towards a development or project. So you're not as in tune with what piece of real estate you're investing in.
Yeah, when I think about REITs, they're really you're really betting on the builder of the REIT. So you're investing in an asset manager. That asset manager then can go do what they want. And generally speaking, in REITs, they have pretty broad spec, right? They could do warehousing and office and I mean, they could do a lot of things. So in a REIT, you're betting on, you know, the person who constructs the REIT. Here, you're kind of, I mean, I don't, tell me if this is a REIT, a reach, a REIT, like you're reaching. You're almost building your own REIT, right? You could do a little bit here, a little bit there. You know, you could do something in Dallas and something in Nashville and, you know, whatnot. You're sort of constructing your own REIT, maybe. I don't know. Maybe that's a reach. I don't know.
Yeah, no, I think that's fair. And something I usually tell people, they ask me that question, or if they're comparing us to a REIT, is like, it's still real estate. I have nothing against REITs. It's just a different type of investment.
Oh,
You know,
yeah.
oftentimes they're listed on the stock market, and it's also fully passive, right? You're not having to deal with tenants or property management or the development itself or anything like that. So both are extremely passive. It's just a difference in, yeah, again, what you're choosing to invest in. Dividends can often be quite different, you know, if they're giving dividends out at all or not. When are the dividends coming? If you do get a dividend, it might be 12 cents, right? Especially if the project hasn't been completed yet and it's still in the works. Whereas with this, you are, you know, on a timetable getting a dividend every quarter. And for the properties that we have that are currently occupied and cash flowing, they've been very attractive as far as what the returns have been so far.
And if I remember our conversation from week one of this, and again, we'll be doing this a couple of times a month together. Minimum investment was $100. Is that correct?
Correct. $100 is the minimum. That's about a 0.02% ownership stake in the home. A lot of people who start with a few hundred, what's great is that they continue to come back and just put a little bit more in each time they get a paycheck, or once a month, or every quarter. So it's a self-paced investment model.
Yeah, one of the things that I was thinking about, and this goes back to, you know, I forget the companies doing it. There were a lot of brokerages doing this. They were kind of giving people a bonus when they sign up. And what I just realized is if somebody in my community used the ORaaT 50 code, which is on the screen, ORaaT 50, and put $100 in, correct me if I'm wrong, they're getting a 50% return, right? Because this code gives them an extra $50. Is that right?
Correct. Yeah. So if you invested 100, then once your investment clears, the reward is sent to your account in that same property. So instead of having $100 in 123 Main Street, you'd have $150 on it. So pretty quick return.
Yeah. Yeah. A lot of folks out there are looking to get started, don't have a big stack. Again, this is a one-time only. This is not forever, right? It's only on the first investment. So let's not get it twisted. Also, let's not get it twisted. If you put $1,000 down, you still only get $50, right? It was just some mental math I did in my head. Wow, $100 minimum, you're going to give them $50. That's a 50%, you know, return. So that's pretty wild.
Yeah, no, absolutely. It's been great. And, you know, I've had a few conversations with members of the community, and it's been awesome. It's good to speak with people who, you know, have all different types of experience levels, but coming from your channel, I mean, a lot of these people have one or two rentals and they're looking to grow, but don't necessarily want to purchase an entire new home.
Yeah.
And then we can get to this, but with the new inventory, we also have a few promotions running right now as well, because those were just listed last week. Yeah.
Well, as promised in the first video, we're gonna actually bring up the application. So you're sharing it now. Let me just add it. to the screen. Drive us around. What are we looking at? Take us on a tour.
Yeah, definitely. So caveat is that we do also have an app that's available on both the iPhone and Android. That's where most people navigate the platform. But yeah, of course, there's a website as well. So it's pretty straightforward, right? I mean, you visit the RealBrick site. If you haven't signed up yet, you'll create an account. You put your information in, you upload your ID, and you link your bank account. It all takes about 2 to 5 minutes. It's very easy. As mentioned on the first conversation we had, we are registered with the SEC. So everything's very secure, encrypted, all that good stuff. So your information is secure. So if you visit the site, we can focus today on what the property pages look like. But if you just continue to scroll through, let's say you're more of a first-time investor, we have a good learn section where you can read blog articles, how it works. We have an FAQ section. My colleague Mike writes up some really nice blog articles. He just did one on the power of compound interest. You can take a look at our team here. And it's really meant to be a pretty straightforward website, which I love. It's not overcomplicating things. And then obviously there's the how it works page. There's a video that we have with my colleague Taylor that you can watch. A lot of people end up watching that, and just kind of goes over, what to expect when you're investing.
I like it.
So once someone has kind of done their own self-education, they may have received a call from me already by that point, because I'll typically call everyone who signs up. They'll visit the marketplace, right? So this is where you can view the properties we have. And obviously, Mike, feel free to stop me.
No, I'm loving this so far. Keep going. So,
as I just mentioned before last week, we only had properties in Omaha, Nebraska. It's the first market we launched in. I also live in California like you, and a lot of the people in your community, I from what I've noticed, also live in California. I didn't know anything about Omaha before I started here, but I've been pleasantly surprised by that market. It's a growing market in the Midwest. It hasn't blown up yet like a Nashville or Austin or Atlanta, but it's still growing, and it's under the radar, which is almost kind of what you want sometimes when you're looking for a rental home. So those were the first set of homes that we launched. We're in Omaha. The Dalmore is one that just fully funded last week. A few of your followers were able to get in on that one, and that one's closed out now. And what that means is that all of the shares have sold on that one. So
and again, do I remember right? Was there 300 shares per house? Is that what it was, or 400?
Well, the purchase price was around $400K, so there were about 40,000 shares. Each individual share is $10.
That's what it was. $10. That's the thing. Each share is $10. So you can do the math on number of shares. Okay, got it.
Yep. And so there are currently 2 properties that are occupied and cash flowing. They're both in Omaha. That would be the Woody Creek, which was built in 2015. The tenants just extended their lease through next year. And then the Blanton was built in 2022. That's in a different neighborhood. Tenants also just extended their lease through 2026 as well.
Nice.
So if you click into a property, you can look through the photos, obviously. You can read about the area. And then you'll scroll down. We won't get too into the weeds here, but you can look through all of the expenses. You can type in, estimated investment amount and what that's going to look like in X amount of years.
Nice.
I've been working on getting a compound interest calculator in here so that you can kind of see what it looks like if you just continue to reinvest.
Sure.
And then you'll notice there's no mortgage, right? So we purchased this home all cash, which our investors are very happy with. So there's no debt on it. And then you can just look through the numbers, right? Obviously, some people are more numbers oriented and want to dig through all this. You'll see our fees. This assets under management fee, 0.75 a quarter. None of these fees are direct fees to you, right? So all of these fees are baked into that expected return.
Of course.
And then if someone's super analytical, they can pull up the offering circular, right? Since we are registered with the SEC, there's this big old document, and some people do this, right? They read through it, they look at the risks, they look at all the numbers, all the entities that have done the purchasing, things like that.
And again, you're going to have this per property.
Correct. Yep. So all that's available, right?
Yeah, that's great.
Yeah. So that's all there. And then you've got your FAQs down here. Once someone's ready,
Mhm.
It's pretty easy. You would click buy. You would type in your PIN that you created when you signed up. And then let's just say, hey, I'm just starting and I want to start with 25 shares, right? That's a $250
Yeah,
investment.
25 times 10. Yep, got it.
Right. So you can see that's the first one that's selected. You can do popular, which is 50 shares. That's a $500 investment.
Mhm.
Not a lot of people are doing this, but you would have the ability to max out, which would be that 9.5% ownership stake, which is closer to a $38,000 investment, right? So that's a much
Yep,
heftier investment.
for
And
sure.
then what you could do is anywhere in between. You can start with 10 shares as the minimum. That's the
Mhm.
$100.
Nice.
Some people do 500 shares. That's a $5,000 investment. So you can pretty much start with whatever you want with between 100 and then this big number right here.
Okay, got it. Again, the maximum is sub 10% ownership by a single member, single person.
Correct. In each
Okay.
property. Yep.
Yep, I like it.
So let's just say I was going to do 25 shares, preview order. My bank is already connected as part of
Mhm.
the onboarding process. So that's
Yep.
already selected there. I've run accept, obviously, terms of use if you wanted to read through those. Place order. This is called a subscription agreement, which I will sometimes clarify people that it's not a Netflix subscription. There's not an ongoing fee or anything
Yeah.
like that. You're not subscribing to something that's charging you monthly. You can read through this. My signature's in there. I test that I'm Nicholas Roman. I have read and understand the above agreement.
Nice.
So agree to terms, and boom. So I actually just purchased 25 shares of the Blanton.
Nice.
Yeah, so I'll get a flood of 2 or 3 emails. Everything is tracked right on the website or in the app. You can look at your portfolio. But now I own 25 more shares in that home. So I just increased my equity in that property.
Wow. Very, very cool. So a couple of questions. We talked about quarterly dividends. I'm guessing just to keep the operation running smoothly, all houses kind of send out the dividends on the same day, I'm guessing, or same week?
Correct. Yep. So we've got a
Yep.
great team and they're sending out dividends typically in the first few days of the new quarter. So for example, right now, this home as well as the Woody Creek will pay out in the first few days of January is when dividends will be
Is the
distributed.
next dividend. So it's like January, April, July, October.
Correct.
Those, okay. And and again, that's same for, it's not a mix. It's not like this one's in October and this one's in December. They're all October, July.
Correct.
Okay.
Yep.
Yeah. It's smooth operations. And then what about like, could you show me, and if you can't, because it has, account information, I get it, but what does an owner see? Like you just said, you increase your ownership of Blanken. What do you see kind of expenses, reports? What do you see as somebody who's already an owner? Can you come in here and check stuff?
Yeah, absolutely. I won't pull it up just because it will show the exact amount
Yeah.
of shares I own in each property.
No
But yeah,
problem.
you can
Yeah. Yeah.
track it. You can track it per property, what your dividends have been.
Hmm.
We are working on improving the portfolio section, so it's a bit more in depth on how it's been performing the previous year.
Yep.
As far as like appreciation goes, I think it'd be great if we had something in there about, hey, here's what we bought it for, but here's the most recent Zestimate or desktop
Yep.
appraisal. So that's something that'll be in the works as well. It'll be really
And
cool to
then
see,
and
hey,
then
here's what
tell
your
me,
share value is.
yeah, that shell value was going to be my next question. So we know we know what it costs to get in, $10, but as you're owning these for 3, 4, 5 years, in many cities you're going to have appreciation. So how do you kind of reset the value from $10 to something hopefully higher?
Sure. So some of that's TBD, right? I mean, we became available for people to start investing with us in July of last year.
Okay.
And our secondary marketplace has not gone live yet. It will be in
Right.
the first half of next year. And that's where you will have the
That's
ability
the
to
key.
sell your
It's the
shares.
secondary. Yeah.
Correct.
So how does it work so I love that. I think the secondary is going to be an amazing thing because that's where this thing gets a lot of fun.
Mhm.
Is where you can get in and out of opportunities. But let's say you wanted to sell 25 shares of that house you just bought. How would that work today?
Yeah. So a big
Or
part
we
of
have
what
to
I do,
wait?
yeah, a big
Go ahead.
part of the conversations I have on the phone is, hey, this is a long-term investment.
Yep.
It's not the most liquid investment to start, but
Correct.
people aren't doing this for short-term gains. If they are, I tell them this might not
Not
be
to
the best
play.
investment for you.
Yeah.
Right.
No, I totally agree with that. The real estate's a long-term game. So would you advise someone, would you advise your mom, your friend to think minimum 5 years? What do you think?
Well, it depends, right? I mean, as you know, I mean, depends on the market. If a market's booming and your share value is at $17 a share, then go for it.
Hmm.
Personally, I'm on the train of I'm just going to buy and hold forever
Right.
until
Yeah.
the property gets sold, or I'm just, as long as there's a tenant in place paying rent and it's cash
Right.
flowing, I'm going to hold on to my shares.
No, that
I'm
makes sense.
looking very, very long term, which a lot of our investors do. And again, if someone's looking at other types of investments and they want a faster return, then great,
Hmm.
go for it. Right, do a fix and
Yeah.
flip, or
Sure.
yeah,
Well, you could do a fix and flip and take 5% of the proceeds and put it into a long-term hold and just keep running the business. How about taxes? Like, do you send out, I don't know what it would be called, 1099s or
yep,
depreciation schedules? What does the end of year tax statements look like?
yeah. It's pretty straightforward. It's a 1099 DIV, so it's
Oh,
pretty
that makes
similar,
sense.
yeah, to what you would receive on your tax or on your stock portfolio.
Yeah. 1099 DIV makes total sense to me. How about depreciation? Do you send out a schedule for that or um, is it up to the accountant of the individual to calculate the depreciation?
That's a great question. And one of your followers who reached out to us, that's the question they asked. So our legal team's trying to work through how that's possible. I don't believe it's not the same as owning a property outright and being able to write off depreciation. I know that.
Mm, okay.
But there are certainly tax benefits to owning stocks long term. And I mean, and this is essentially the same thing as owning a stock.
Okay.
You hold for over a year, your taxes go down if you sell. I'm not a tax professional.
Sure.
So
No, no, it's okay. Yeah, it's fine.
yeah,
It's just so again, so I should look at this not as owning 10% or 9.5% of the house. You have shares in the house. That's how to look at this. So it's a share based
correct.
taxes. So again, long term capital gains after a year, things of that nature.
Yep,
Okay, that makes sense to me. What
exactly.
what else does a one rental at a time fan again? If they wanted to make 50% on $100, they could use this code. Um, but if somebody would, what did my audience say or reach out to that the few that you spoke to? What were the kind of their questions and thoughts?
Yeah, as I mentioned before, the ones who came to us and have invested, they have experience in rental investing,
Right.
which is great. So a lot of them are looking for ways to continue to expand their portfolio, as we all are, but
Hmm.
they don't necessarily want to get another mortgage and
Right.
an agent. Maybe it's a new market that they're not familiar with. So this is a way that they're able to diversify and not put $120,000 down to buy a rental property somewhere,
Right.
or
Makes sense.
$80,000 or whatever it is, right? I mean, you start with a smaller amount and then just continue to invest at your own pace. A lot of people start with a few thousand and then they get their first dividend, build some trust in the company,
Hmm.
legitimizes it when they see that dollar amount in their Real Bricks wallet, and then they come back
Yep.
and put more in.
Yeah, makes total sense to me. Kind of try get the POC proof of concept and
Hmm.
build that validation through actual investing. Last time we talked, I think you were talking about having some available properties in Omaha, but now I understand you added Dallas and Nashville. What do you got there?
Yeah, so we have 3 new properties that we added last week. It was actually the day after you and I recorded. We added 3 new homes. So one of them is in Princeton, Texas, which is just north of Dallas. That's the
Okay.
Garrison. All 3 of these are currently being constructed and will be finished by the end of the year.
Ah,
Tenants in
new
place.
construction. Fun.
Hmm.
Okay.
Yeah, super excited. Tenants in place, January, February. So
Hmm.
those ones will not be cash flowing until either Q1 or Q2 of next year.
Hmm.
But what you're getting is a brand new construction home with a warranty and a new lease in place. Um,
Oh, I like it. Okay.
the Weller is right outside of Raleigh, North Carolina, in an area called Wake Forest. It's not like it's a small town.
Yeah,
And
Wake
then,
Forest. Yeah.
yeah, and then the Michter is in Tennessee. So that's right outside of Nashville, in a suburb called Lebanon, which is growing.
Yeah. So, I mean, I know this is hard to tell, but are you trying to add inventory every week, every other week, like monthly? Like, how often should people come here to see what's new?
Yeah, great question. We want to get to a point where we're adding a new property every week. We're
Okay.
not there right now. So these 3 new homes are through a partnership with a home builder,
Of course.
and we are on a
Makes sense.
clock to sell out all the shares. So we're
Yep.
very focused on these properties right now, as well as the Omaha properties. And then if this pilot program with them goes well, then that really opens up a whole lot of inventory because they're a big builder, and we can, enter new markets every week.
Right. Yeah, makes total sense to me. Are you doing anything special given that these are a little different? They're not quite fully constructed yet?
Yeah, so we just sent out a text to all of our investors yesterday who've not yet invested in one of these. And if you put $500 or more in, then we'll match you at 10%.
Oh, wow.
So if you put in 500, that's an extra $50 in shares. If someone puts in 10,000, then we'll bonus you $1,000 in shares. There's no cap on it.
Right.
Just kind of to wet the whistle on getting people excited about these new homes. And, with that bonus amount, you're essentially covering plus quite a bit the
Mhm.
missed dividend that you won't be receiving at the end of the year.
Yeah, again, you're gonna buy it now, money goes out now, and you won't get a dividend that first 90 days, but you're making it
Right.
up with this 10% kicker.
Absolutely.
Oh, makes total sense. Anything else you would wanna tell my audience, to go play with, use the code, any other closing thoughts?
Yeah, I think you have got that code right there on the screen if everyone can see that.
Mhm,
So it's really easy, right? You just go to I do recommend downloading the app.
mhm,
Obviously, if someone wants to use their computer, that works as well. And then on the order page, it didn't show for me when I clicked into it, but there will be a little box to type in referral code.
right.
Or when you're signing up, it'll ask you as well. So either place works.
Yeah, referral
And
code
then
ORaaT50. Yep.
Yep. And then there's no code needed on the promotion for the 3 new homes if you put $500 or more in to match it at 10%.
Very cool. Well, this is a lot of fun. I think this is something my audience is going to, they're going to try it. They're going to dabble. But as more and more members come in, they'll tell each other, and should be fun to watch this grow, because I think fractional investing is here to stay. And it's going to be fun to see if Real Bricks is one of the winners. So this should be fun.
Thank you, Mike. Yeah, I appreciate that.
All right. Take care. Have a great week.
All right. See you. You too. Thank you.
Mhm.